Mr. Somasundaram joining us now from the World Gold Council. Everyone is looking at the kind of price increase that we're seeing ahead of the season this time. Mr. Somasundaram, tell us really what are some of the metrics that you're observing right now and the kind of reaction we're seeing to these gold prices?
Yeah, as this saw, the prices actually shot up very, very sharply in this quarter. We, first of all, had a very, very good December quarter last year, December 2021. It was, in fact, one of the best quarters for India in our data series over 25 years. Okay. And that is because, we started coming out, lockdowns were relaxing, prices softened, and people started, associating gold with various functions, which all came back. Now, following from a very, very good December quarter, the trade was expecting that January quarter 2 would be a very good one. But that was not to be, because initially, January, we had the third wave. While it was not as bad as the second wave, it did mute many celebrations, many weddings, etc., became again muted affairs. And soon after that, we had a period of inauspicious dates. So there were not many weddings. And then March, you saw this conflict brewing, which impacted the price, and it started going up. Now, what happens when prices normally go up is consumers wait and watch, because they like the prices to go up in the long term. But in the short run, when it goes up, they want to be very sure that it is a sustainable price increase. So anecdotally, we heard from many jewelers that people came, they looked at lots of jewelry, but then when the price was quoted at 53, 55,000, including GST, they said, okay, we will probably come back next month. So that is to be the general narrative now, saying that, look, we will wait for the price to subside.
So what would you suggest to someone looking to invest in gold? What's the best way to go about it? Which are the instruments that you would look at?
Yes. See, gold, particularly when it comes to India, when you think of gold, you think of a jeweler. Okay, you really want to go to your family jeweler first, and then maybe somebody trusted, some branded jewelers, etc. But there are other ways of buying gold now. One is obviously if you're just wanting to make the price, want to have a play in the price, ETF is a good way. You have ETFs which are quite liquid in the market. So you could go and buy ETFs. There are some charges, obviously, but ETF is a good play. You can buy a sovereign gold bond. Again, sovereign gold bond, the point is there are only primary issues. The secondary trading is very limited. You still can get it, for people who are having small amounts of money, you can still go into the market and get it. It's normally available at a slight discount to the original price. So you can get that. You can buy digital gold in small things. There are 2 or 3 parties. I know it is not regulated, but they are still safe. They are kept in a separate vault, and this is done by a few reputed players. You could buy it in small quantities there. It's even available on platforms like Amazon. And then you come to the physical gold, which is always available. Now, when you buy the physical gold, of course, today hallmarking has been made mandatory, but you've got to take extra care when it comes to buying physical gold, because at these prices, even if there is a 1% variation in the purity, you're losing a lot of money.
And with gold at these prices, does it still make sense to get in? That's the other big question. Is it still a better option than, let's say, an SIP at this point, given the way prices are moving?
Yes, we don't offer investment advice. Let me make that very clear. But having said that, how do you buy gold, and can you time the purchases? Clearly, if you're buying jewelry for a wedding, you don't time it. You've got to buy, minimum thing. But if you're really looking at a long-term investor, and is this a good time to enter? We would always say that, look, you can't ever time the purchase. How can you say what the price is going to be? We don't know what is going to happen to inflation. We don't know what's going to happen to many currencies. You're seeing our neighborhoods, Sri Lanka and other stuff. If you're keeping a piece of gold, you know how much it is worth there now. Okay, but when it comes to India, we have a strong economy. It is growing, but we have a love of gold. So it is always good to keep a plan of buying rather than buying in one bulk, because see, gold, thankfully, none of us wake up every day in the morning other than for ETFs. We don't wake up in the morning and then say, what is the MTM of my jewelry? Which is a very, very good thing. That's how, our families kept gold. They bought the gold and they forgot about it. They wore it, but they forgot about it. You don't wake up every day and say, oh, I bought it at this. What is the MTM of this portfolio of jewelry I have? That must be our view, long term, just buy gold, buying small lots, depending on your, the pool of money that you have. Don't try to time it. It is always difficult. Having said that, currently, if you believe that there is going to be some softness after the war, then it is always preferable to wait.
All right, so that's an interesting take coming in there, Mr. Somasundaram. I know that that's not advice, like you said, but a word of caution, let's say, coming in. Thanks so much for joining us.
If you like the video, do like, comment, share and subscribe.